Welcome to Money Making Sense, the show that talks about all things money. We are almost right in the middle of our tax tip series. This is tax tip number 4, and we are talking home office deductions. And I have joining me, you are Greg Denning, right? Greg
Correct.
Denning.
Yep.
You are managing partner at Larson and Company. Welcome to the show, Greg.
Yeah, thanks for having me.
So you are going to help me out. I have about 10,000 businesses going on. So can I write off every single one of those businesses on my taxes as a separate business?
If each business is engaged in for a for-profit activity, as long as they are a business, then there are certain items of expense that you can deduct.
Ooh, so if I have one drawer that shares a bunch of different papers from the different businesses, do I get to write that drawer off 3 times?
Nope, just one time.
Oh, all
just
right.
one time. Yeah, you can split the expense between the 3 businesses, but you only get one deduction for the same expense.
Okay, so I definitely need to come to a certified public accountant, so I'm not trying to get more than I deserve.
Correct. You don't want to be double dipping. Or triple dipping in your example.
I kind of do, but I don't want to get caught. So what can you do to help, guide me through when I set up my home business? What are some of the things I need to know so that I don't get into trouble?
Well, what you want to make sure you're doing is properly tracking your expenses. And if you have multiple businesses like you were talking about, you just want to make sure that you're tracking expenses by business, or if you need to allocate one expense between the 3 businesses, you can certainly do that. But you can't double or triple dip the same expense. You only get deducted once for one payment.
Okay. So what are some things that I need to know about before I even get started? Like, let's say I'm going to start my recording business in my home. I haven't filed as a corporation yet, or even a partnership. Before I even get started, what are some things that maybe I need to do to get a home office ready?
Well, some of the things that you need to do, I guess, first of all, decide, if you want to be something other than a sole proprietor, meaning, if you want to decide, the easiest way to get started really is as a sole proprietor, which you would file a Schedule C or a self-employment tax form. If you decide you want to do a little more than that, you can either set up as a single member LLC if you're just the only owner, or you can set up as a partnership with someone else, or you can set up a corporation or an S corporation. I mean, there's a whole bunch of things, but I think when you're just getting started, probably the simplest way to get started is just do the self-employment tax Schedule C. And
if I'm not sure, or I don't even know, like you just rattled off a whole bunch of things, an LLC and a C Corp, and I don't know what any of that is. Yeah. I can come to a certified public accountant ahead of time, and you can help walk me through that, or even discuss with me what is best for my situation?
Certainly. A CPA can help explain whatever, all the different things that I mentioned. They can also help you decide which one is best for you for your business that you're talking about.
Okay. So let's say I set myself up as a sole proprietor, and I've been working for, at least a year, and I've started to bring in some money. So now I'm ready to file my taxes. How is that going to differ from just my regular 1040 taxes as an individual?
Well, the way it differs a little bit, the self-employment tax does end up on your 1040. It's just there's a special form called a Schedule C where you report all the income and expenses for the Schedule C. But it does end up on your 1040 with your wages and maybe interest income, dividend income, whatever income and deductions that you may have. It does end up there.
Okay. And how much is there a limit on how much I can write off on my business? Can I write off 100% of my income? How does this work? How does it work being a business owner and writing off my taxes?
Well, the expenses that you want to write off against your income need to be ordinary and necessary expenses associated with that business. You can't start writing off otherwise personal expenses just because you're self-employed. You can only write off expenses that are related to whatever it is that you're doing. Now, there are certain expenses, like if you have a home office that you're doing, some of your expenses can end up, some of your personal expenses can end up as business expenses. So, for example, if you have a home office and you have mortgage interest or property taxes, and you have a home office that qualifies as a home office, meaning that you're using it on a regular and exclusive basis for a home office. So let's say your home office is 500 square feet out of a 2,000 square foot home. So 25% of those expenses for the mortgage insurance, the property taxes, utilities, those kind of things, you can actually take as a deduction against your home office.
Okay, so if my mortgage payment is $1,000 a month, and 25% of my home is my home business, I can write off $250 of that mortgage payment as business expenses?
Not the mortgage payment,
not
just
the
the interest.
Oh,
you can't write off principal, only interest. And so, I'm not sure how much interest would be on your example. Whatever that interest is, you can deduct that.
Oh, okay.
And so 25%, let's say $100 of that was interest. $25 of that could go to your Schedule C as your self-employed, and the $75 would then get deducted on your Schedule A or itemized deductions like you've been deducted in the past.
Okay. So what if my home office is a corner of the playroom for the kids?
That becomes a little more tricky because you need to get a home office deduction, you need to use it exclusively for the home office.
Okay.
And so if you've got it in a playroom, it may be a little more difficult to get the home office deduction, but maybe if you separate it from the rest of the room, so it's only exclusively used for your home business, then that helps make it more of the exclusive use part of the home.
Okay, so the business that I'm doing is actually like a recording studio, and I had to soundproof everything in there. Can I write off all the things I needed to purchase to soundproof that room?
Most likely, yes.
Okay, when would I couldn't do that?
Well, as long as those expenses all relate to the soundproofing of the room, and you don't do some remodeling or redecorating that maybe is more personal than home office, then like I said, the expenses directly related to the soundproofing probably work for you.
So if I did a complete remodel of the entire house, but with that, I also added the home office, is that where I have to kind of be really careful on receipts and what was used for what?
Yes, it's always best, no matter what, is to keep track of receipts.
Okay.
To make sure you've got receipts for what you've done.
So I have a whole bunch of receipts. I did actually remodel my whole house. I put in a new floor, did painting, the whole bit, and then just added this recording studio because I knew I wanted to start with that. And so I have a whole bunch of receipts in a paper bag, and I can bring them to you and just go, here, work it out. Is that how that works?
You can do that. It's not the preferred method of doing that because it generally tends to be more expensive for you if you bring just a bag of receipts and ask your CPA to figure out what all the receipts are. If you take that bag of receipts and itemize them, or at least put them in different categories as to what they actually belong to, that is much more of that's a much better or an efficient way to help your CPA. I mean, the CPA can certainly dig through that, but it's probably going to cost you more money than it should if you dig through it on your own. So you're going to charge
me to go through all my receipts and work it out yourself?
Yes.
Okay. Shoot. All right.
I mean, we can certainly do that, but it's
okay.
It's more helpful if you at least take the initial pass through it and say, okay, these expenses are related to flooring, this is related to the soundproofing, things like that. Okay.
What if the flooring also, like I did the whole house, including that sound studio, and the flooring was one big cost? How do we deduct the little bit of the flooring that was for my studio?
Yeah. Now on the flooring, it would be added to the cost of the house, and so we would then take, in my example I used before, 25% of that cost.
Okay.
But with flooring, home improvements, and things like that, we can't just write all those off. A lot of times we have to add that to the basis of the house and then depreciate those kind of home improvements and a portion of the house for the home business.
Okay.
You can't just write off the cost of something like a home remodel. They get added to whatever you initially paid to the house, and then you
Okay.
depreciate those.
So it sounds like it's a little more complicated than me just being able to sit down at a computer and do my own taxes. If I've added a home office that was also included in a remodel, I definitely need to be going to a certified public accountant. Is that what you're telling me?
Yes.
Because if I don't and I submit something, chances are the IRS is going to come back at me.
They may have some questions that they want to follow up with you on. That may definitely be the case.
Okay. All right. What else do we need to know about for a home office?
Well, for a home office, you know, whatever supplies that you buy for your business, those are certainly deductible. If you're buying microphones or pads of paper or a computer that's used for your home business, those kind of things are certainly deductible for a home office.
What if the computer is used both for my business and personal use?
Well, then you need to track, or at least estimate, how much is personal use versus how much is business use, because only the business use would be deductible.
Okay, sort of like if I do the studio from 8 to 5, that's 8 hours every day, minus my lunch. But 8 hours a day I use the computer, but it's a laptop. And so then when I'm done, I take the laptop with me upstairs and then do personal items. So I can only write off 8 hours a day on the computer.
Or whatever the percent, maybe that 8 hours is the vast majority of your use of the day for the computer. So whatever that percentage is. So maybe you're using it 60, 70% for business and 30, 40% for personal.
So basically we need to, this isn't something we can just set up and sort of ignore. We have to pay attention to how we're using the office, how much we're using the office, the whole bit.
That is correct.
Okay. And if I have a bunch of different businesses, I can't write it off 3 times.
No, that
really
is also
trying.
Correct.
really trying.
Yeah, you can't write off the same dollar 3 times.
Okay. What about food or meals, things like that? How do I take care of that in my home?
In order for meals to be deductible, there must be a business purpose associated with it, such as taking out a client, prospective client, or something like that. Your normal meals, say you decide to buy a meal and eat at your laptop during lunchtime, that's not a deductible expense. It has to be associated with, like I said, taking a client to lunch, taking an employee to lunch to discuss something. There must be a business purpose behind deducting that meal. Okay. And also with regards to meals, you only get to deduct 50% of the meal that qualifies.
Oh.
You don't get to deduct 100% of it. Even if you're traveling, even if, say, you have to go on the road to do something for your recording studio, those meals while you're on the road are only deductible at 50% as well.
Oh, okay. So this little chat that we're having over this nice little cafe and my nuts, I can only write off 50% of these nuts. Yeah. Okay. All right. Anything else before we head out?
No, not that I can think. Well, there is a new change in the law. We used to kind of lump meals and entertainment together as 50% non-deductible. Under the new law, meals are still only 50% deductible, and entertainment is completely non-deductible going forward.
Oh.
So if you're entertained with movie tickets or jazz tickets or something like that, those are now non-deductible expenses starting this year in 2018.
Man, I just bought those season tickets for all my clients. Okay, well, all right. Well, thank you, Greg Denning. You are a managing partner at Larson & Company. So if we have any questions or concerns regarding our home business, I'm going to come to you and you'll help sort it out. And I am going to just drop the little paper bag on your
That's perfectly fine.
Okay, awesome. All right. If you do need a CPA, please go to uacpa.org to find the certified public accountant that's right for you.
Thanks for being a Money Making Sense listener. Follow your common sense on social media. Money Making Sense on Facebook, Twitter, and Instagram.